My name is Mohamad Jomaa. I'm the CEO of Coface in the GCC region. We're not in the food business, so we're not a household name in this industry. We do, however, support billions of transactions in the food business. We're in trade credit insurance and the business of providing credit data to businesses around the world. One of the things or one of the activities that we do as a trade credit insurance business is that we monitor the risk and we grade risk on sectors around the world. We namely monitor particularly 13 sectors that constitute the majority of the global GDP in the world, and the food sector in particular is one that we keep a very close eye on for a number of reasons. Obviously, food sits at an intersection between global trade, demographic changes, climate change. These are all risks that we're very sensitive to and we need to keep an eye on. It is the most sensitive and globalized trade in the world. Trade tensions impact what we eat, and unfortunately, it's used as a tool in global trades, wars and global tensions and political policy. Demographic changes that Professor Jose alluded to are obviously also risks that impact our decision-making and the risk that we cover around the world. Above all of this, food is not just a commodity, it's a priority. Food security is something that governments invest a lot of money and policy into, and that could have social and political repercussions that impact our decision-making as well. So all that to say, food for us is a barometer that gives us a real-time check into how well we're doing in terms of global system. So while we know that GCC, in terms of economic activity, economic trends, is doing extremely well, we do, as Coface expects, the GCC to land at somewhere between 3.8 and 4% in GDP growth. The UAE even at 4.4 to 4.9%. Unfortunately, the rest of the world is not in general doing as well. There are geopolitical tensions. The world, unfortunately, today is divided and trade policies are shifting constantly, which poses challenges on businesses, particularly in the food sector. The rest of the world in general and most advanced economies are experiencing economic challenges, from sluggish growth to inflationary pressure that we're still trying to battle with, despite all the efforts that central banks are putting in place so that we have a soft landing. We do expect some challenges in that area. Debt refinancing is something we pay close attention to. In 2025, we do expect a lot of businesses to be renewing their financing agreements and lending agreements. And that means financial institutions are going to look at these lending agreements with a fresh perspective, more covenants, more collaterals, and that's more financial pressure on businesses around the world. Systemic challenges, obviously, is something that we keep an eye on as well, and Dr. Jose alluded to some of those. Climate change is one of them, and then demographic challenges are also impacting this trade. Namely, the changing behavior or the changing demands more food and better quality food in emerging and developing countries, and a shrinking workforce that support global trade around the world and in more developed countries. So all that to say, I think it's more than important today for businesses to be vigilant, be on top of the risks, and monitoring what risks are they exposed to in their supply chain. We're not going to spend a lot of time here, but this is just to show the significant change in trends that we're seeing in terms of global GDP, in terms of GDP growth in the GCC region on the left-hand side compared to the advanced economies on the right-hand side. Obviously, these are opposite trends. We see almost across the board growth in GCC versus economies that really impact us on the supplier side and on the buyer side, the rest of the world, where we see the exact opposite negative trend, unfortunately. We quite frequently talk about operational risks in the supply chain. We talk about financial risks in the supply chain. Credit risk is one that's, in general, overestimated by businesses. Being in the TCI or the trade credit insurance business and the credit information business, we do have access to unique data and unique information on how companies are behaving when it comes to honoring their payment commitments, their financial commitments. And what we can say with a lot of confidence is what you see on the right-hand side of the chart is that 80% of advanced economies around the world are reporting a significant increase in bankruptcies and insolvencies. So that is a risk, unfortunately, that is not very transparent unless you're in that environment, but is in the supply chain and a risk that's inherited whether on the supply or buyer side of the transaction. Some of the blind spots that we see businesses don't consider when it comes to credit risk that we need to keep in mind. One that is really a priority above anything else is the transparency. Unfortunately, despite a lot of effort and investments paid by governments and institutions around the world, there is still a problem with transparency in the supply chain. That means there's very little that we know about the financial health of our suppliers, very little that we know about the financial health of our buyers in most economies where this information is not available publicly. Payment behavior as well. There's a risk that's commonly also not looked at is how much am I exposed to business groups in aggregate. We don't see the linkage between companies anymore in a world that's very interlinked. So when I'm exposed, I'm not sure how concentrated my exposure is on the supply side or on the buyer side because I don't have the visibility on how linked these companies are globally. Finally, compliance, which is a very important topic today. Unfortunately, what we see is that despite how much effort and investment goes into making our house here in order and your company is in order, if your buyers and your suppliers are not on the same page, that is a risk that unfortunately you're inheriting. So all that to say, it is a world where there's a lot of uncertainty. And in a world where there's a lot of uncertainty, it's difficult to forecast. And when we cannot forecast, we always say it's best to be quick and be agile and be light. And that means you need information, you need data. So my message here is emphasizing the importance of data, which is also underestimated so far still in some industries. Data is not just about acquiring data. So today, there's a lot of talks about data and the availability of data on information around the world. It's a big part of decision making. Companies need to pay a lot more effort in finding timely, accurate data on their supply chain, making sure that this data is part of their informed decision making and put governance around how this data is acquired, how it's treated, how it's stored. Data security measures, compliance are big topics as well. Accessibility of data and where you get your information from is a big topic. What we're trying to highlight today here is there is a world that is changing where data is becoming scarce. There's a shift in behavior in how data is acquired and how data is measured, and there are ways to work around that and find a way to measure risk. This is just to illustrate the complexity of credit decision-making in a world that we live today, and particularly when it comes to credit risk in the supply chain. What you see here, without going into details, is what goes into taking one single decision on a buyer or a supplier in our environment, in Coface. So that includes proprietary information, includes contribution from clients, include information that is available to us publicly or through governments to take one decision to qualify one buyer or supplier for a credit limit on our policy. Obviously through extensive and a large magnitude of integration technology that supports that. We're proud at Coface that we've established an architecture of data that supports 18,000 decisions per day on companies around the world, whether suppliers or buyers in the food business. We're supporting 700 billion of trade around the world and have data on 220 million companies around the world. I will close with this. Again, we're in a very uncertain economy. There are a lot of shifting policies, a lot of shifting factors that are impacting trade around the world. And as I said earlier, if there's difficulty in forecasting, it's important to be agile, and data is one way to build on that. Thank you. I hope that you found what I shared with you helpful, and wish that you enjoy the rest of your program.